Welcome. Today, we will shift focus to another essential topic: how your income and resources affect your eligibility for Supplemental Security Income, or SSI. We will explain how wages, savings, and even gifts can impact your SSI payments, and what the rules say about what counts and what does not. This session will help you know what types of income and assets to report, what is excluded, and how to protect your eligibility as you move toward greater independence. Important note for everyone: before we start, this presentation doesn't determine if someone may be eligible for Social Security disability benefits or other government services. The information presented today is general and may not include the most recent changes related to today's topic, including annual income limits. Rules and programs can also change with new laws or updates, which may not be reflected in today's presentation. We recommend that you consult directly with Social Security, a work incentive planner, or other professionals to get accurate information that best fits your personal situation. Let's get started. As we have previously discussed in earlier sessions, SSI is a program run by the Social Security Administration, or SSA, that provides monthly financial support to individuals with disabilities with limited income and assets. Eligibility depends on your financial situation, which is why SSI is considered a means-tested program. To qualify for SSI, your financial resources must be limited. Specifically, you may not have more than $2,000 as an individual or $3,000 for a couple in countable resources. Social Security evaluates your finances when you apply and periodically afterward to confirm continued eligibility. Your countable income must be lower than your state's SSI base rate to be eligible. The SSI base rate is the maximum SSI payment allowed. Your monthly SSI payment equals the base rate minus your countable income. Each state sets an SSI base rate, which includes the federal benefit rate, or FBR, plus any additional payment the state may add. For example, if the FBR is $967 per month and California adds a supplemental payment of $240, that would make the SSI base rate in California $1,207 per month. Social Security can provide both the current FBR and the California SSP rate. If you are working with a work incentive planner, or WIP, or another benefits counselor, they can quickly provide this information to you. Income is money or help you receive that can be used to pay for your home or living expenses. There are two main types of income: earned and unearned. Earned income is money you make from working, such as wages, tips, or money from your own business. Unearned income is money you get without working for it. This includes things like Social Security payments, unemployment benefits, gifts, or money from other people. It also includes in-kind income, which is when you get free housing or pay less than your fair share for a place to live. Another type of unearned income is called deemed income. This is when Social Security counts part of the income from your spouse or your parents you live with. They assume that some of their money helps pay for your basic needs, so they count a portion of it as your income. Even though this money isn't directly given to you, it still affects your benefits. The good news is that not all income is counted. Some types of income are excluded before Social Security calculates your countable income. To find your countable unearned income, certain exclusions are deducted, such as the first $20 of unearned income each month, gifts used for educational expenses, and money placed in a plan to achieve self-support, or PASS. A PASS lets a person set aside money or property that would normally count for SSI, so it can be used for approved costs that help reach a work goal. We will explain this incentive in more detail in an upcoming session. Countable earned income is the amount of job earnings that Social Security uses to calculate your SSI payment. The good news is not all your earnings count. Before counting your income, SSI subtracts several types of income exclusions called work incentives. These rules help people keep some of their SSI benefits while they work. Some key work incentives that reduce how much of your income counts include the Student Earned Income Exclusion, or SEIE, for students under 22. A $20 general income exclusion, and another $65 per month, and then half of remaining earnings. You may also subtract disability-related expenses for work called impairment-related work expenses, or IRWEs, or expenses specifically for people who are blind, called blind work expenses, or BWEs. Also, money you set aside in a plan to achieve self-support, or PASS, and even tax refund payments. These work incentives are designed to make it easier to work without immediately losing SSI benefits. We will be exploring how using these work incentives can help you keep more of your money while staying eligible for SSI in the next session. Resources are things you own that can be turned into cash, like savings, stocks, or property, and they are used to pay for food and shelter. To qualify for SSI, your countable resources must stay under $2,000 as an individual, or $3,000 for a couple. Some things do not count toward this limit, like your home, one vehicle, and some personal items. Timing is very important with income and resources. When you get money, it counts as income for that month. If you still have it on the first of the next month, it becomes a resource. If you are over the resource limit that day, you will not qualify for SSI for that month. This is why planning matters. Knowing when money comes in and how quickly it needs to be used can help you stay eligible. Not all resources count toward the resource limits for SSI eligibility. Some items are excluded, which means they do not affect whether you qualify. These include the home you live in, household items and personal belongings, one vehicle, term life insurance, and funds in ABLE accounts or set aside for past plans. These exclusions are important because they allow people to keep essential items or save toward goals without losing their SSI. Knowing which resources are protected can help you plan smarter for your future. It is important to understand how income and resources affect your SSI eligibility. Since Social Security has limits on how much you can have in resources, you must keep your countable resources below the limits. To keep your SSI cash benefit payments accurate, make sure you report your wages to Social Security by the 6th of each month, as well as any other changes in your income situation. If your income is reported late or not at all, it can lead to overpayments, which you need to pay back. There are many work incentives, such as impairment-related work expenses, or IRWEs, or blind work expenses, or BWEs, that can reduce your countable income. It is important to keep receipts for these expenses because Social Security requires them when you report your wages. We will discuss the impact of these incentives and how they work in more detail in the next session. If anything is unclear, do not hesitate to ask questions or get professional advice. Thank you for joining us. We hope you have learned valuable information about how income and resources can affect SSI eligibility and benefits. Understanding these basics is key to building financial stability while receiving benefits. In the next session, we will dive deeper into SSI work incentives, tools that can help you explore work opportunities while keeping your benefits. If this is your first time viewing one of these sessions, go to the California DOR website at www.dor.ca.gov and click on Programs for Social Security Beneficiaries link, and then click on Benefits to Independence 101 link to begin the program and learn more about other helpful topics. You have now finished Session 7 of Module 2 in the Department of Rehabilitation Benefits to Independence 101 program. Before you go on to Session 8, please go back to the Benefits to Independence 101 Module 2, Session 7 page to do the activities and look at all the resources we talked about in this session. We are happy to continue this journey with you in Session 8 as we build on what you learned today.